me just like.
We're back on the Morning Brew with friends, and Greg, you're feeling better
I'm feeling a lot better.
after your bout with something over the New Year's holiday.
I think I poisoned myself. I think I ate a turkey sandwich that's probably past its prime.
Oh, that'll do it,
Yeah.
man. That'll do it. The other thing that was past its prime, I guess, was the interest rates.
Well, we knew they were going to go up. You know, we
Yeah.
talked about it, and you and I have been talking about it all year.
Right.
And I held fast. I said, no, they're not going to raise. No, they're not going to
You
raise.
thought that was going to happen in March.
But then as the year went on and as the fourth quarter went on, you know, we suggested that they were going to go up just a little bit.
And they did.
And they did go up just a
Right.
little bit.
Well, the jobs reports were out. The jobs look good over the year.
Yes.
The inflation was ticking up, and that's a good way to stop that. So
Well, the inflation was still under projection. It was under goal.
They were
But
trying to keep it less
but
than 2%.
I think it was an emotional thing.
Yeah.
I think it was an emotional thing where the Fed would like to signal that the economy is doing better, and if the Fed raised interest rates a tad, that would be a signal that the economy is doing better. So they made
Yeah.
their move and they signaled that the economy is doing better. As I've mentioned many times, the jobs report, the revised jobs report actually came in better than the initial jobs report.
Right.
Normally it comes in worse.
Right.
Okay, and so that gave them the little impetus to raise the rate, and that's a show of force domestically. It also affects us internationally. Okay,
Right.
and the Chinese economy is just cratering right now.
Right.
And by bolstering the U.S. dollar, you get China not playing games with our currency.
Right.
Because our value of our currency is going up.
it made it a little more expensive to
play
mess
games.
with.
Yes,
Yeah,
exactly.
that's it. And the other part of it too is that the wages report was up. Everything looked pretty good. And then in your business, in the mortgage business, you guys have been kind of expecting this for a while, and you built that in and baked it into interest rates.
Actually, we don't bake it in. The bond market bakes it
Right.
in. The bond market responds to the stock market, and they had already baked it in. But as you can see, we're still under 4% on
Yeah,
the
we
government
have a little
mortgages.
graphic that shows where the rates are. There we go.
Yeah, we're still under 4% on the government-sponsored loans, FHA and VA. So that's still low interest rates, but not historically low interest
Like they
rates. So
were
you
just
can't
a couple
say that
months ago.
anymore.
Right.
That interest rates are at historical lows. They're low, but
Right.
they're higher than historical lows. And there's only one way for interest rates to go when you've achieved historical lows for as long as we have, and
They
that's
gotta go
up.
back
They
up.
got to go back up.
Do you
And
think
they-
there's a chance they'll go back down if they meet in March and things aren't looking good? Do you think they drop it again, or do you think it's
I
going to
don't
go
think
up,
interest
or?
rates on mortgages are going to go down. I think they're going to creep up as the Fed creeps up the Federal Reserve the payday at the Federal Reserve, their interest rates.
Yeah.
I think you're going to see interest rates creep up.
Do you think
And
in my
there's-
lifetime ever I will be able to see interest rates this low again?
Gosh, I hope not, because because the economic things that took us to that low level
Right.
were hurtful
Right.
for most everybody. And so the low interest rates were a result of a collapse of our economy.
Right.
And we don't want to see that again.
No doubt. So how do you think 2015 ended up for the entire industry for you guys?
Real estate sales were up a little bit over 2014. Mortgage originations were up a little bit over
So
2014.
these people are buying houses. That's
A few more people. What we're trying to do is get those doggone millennials in the game, those
Right.
young folks, you know, the 30-somethings. We're trying to get them in the game, and statistics are showing that more of them are actually getting into the game. They're starting to become a bigger percentage of home buyers. They're up to 30% now of all home buyers are millennials.
Wow.
Okay.
What was that? Take me back though. I mean, is that like, you know, for my generation or the generations before the millennials?
Yeah.
I'm just before that, or just after that, I should
Yeah.
say.
I was going to say you were bragging there.
Right.
You're
Just before, or just after something. I'm older than millennials,
you're-
but not a
you're
whole lot.
before, yeah.
But was my group, say, were we 30% or were we 35%? I mean, was it?
Right around 24% in your group. Yeah.
Okay, so millennials.
You're still seeing middle-aged people to what qualifies anymore at 59 as a senior citizen. You're still seeing them very active in the marketplace. Yeah.
Is there downsizing and empty
Downsizing,
nesters?
making moves, yeah, and
Yeah.
a lot of downsizing going on, and the middle-aged people are coming up and buying those larger houses that the older folks are selling.
I hear you there. So are there any new mortgage programs that will help folks coming into 2015, 2016?
Well, actually, we've got manufactured housing in New Mexico. It's about 40% of real estate sales.
I didn't realize it was that
Yeah,
much of the
nobody
real estate
does,
sales.
but it really is. It's a huge, quiet market. About 40% of all the real estate transactions in the state of New Mexico are manufactured homes on permanent foundations. And FHA got out of that business a few years ago. There was rampant fraud.
Yeah.
And it was terrible. They were losing a lot of money.
And there was predatory lending
lending
practices.
going on, and they're back in the business, but they're back in the business on a consumer direct basis. In other words, you won't see FHA financing inventory off of mobile home dealer lots. They'll finance you if you've had your house set on a permanent foundation for 1 year or longer.
Interesting.
So they're going consumer direct on the financing and dealing with the consumers as opposed to the dealers.
So it's a good time to, can you refinance then?
You can refinance and get off of that jicky paper that it took for the last 10 years to buy a manufactured home, those short-term loans, those balloon loans, things like that. You can get into a 30-year fixed rate government-insured mortgage. Okay, you've got to prove that the house was on the slab, or the permanent foundation for 1 year or longer, that it came directly from the dealership to that location. It hasn't moved around. Okay, and you have to get a engineer's certification that the foundation meets FHA guidelines. But most of them do. Most of the people building the foundations know what FHA wanted and built them to FHA specs, or they can pretty readily be rehabilitated to FHA specs.
That's very cool.
It's a very big
Because
it's a very
you can
big
get away
move.
from a 7 or 8 or 9% loan into a 4%.
Forget 7, 8, or 9, 12, 14, 15% loans, and get into a 3.875% loan.
That's
4.25% loan. Yeah.
I know that a lot of homes, like traditional homes, still qualify for zero down. Can you still do that on one of those refis?
Still got on a refinance.
Yeah.
Well, there's no down payment on a refinance, but on a purchase, get them up to 100% loan to value, 96.5% loan to value.
Okay.
96.5% loan to value.
That's pretty huge.
Yeah, no, it's very important.
Right. And then, of course, there are still 0% down programs available,
Yes,
right?
the Veterans Administration program being the best. If you've ever done any time in the military, you need to talk to us about VA financing because it's the best financing going. There's also USDA financing in the outlying areas down in Los Lunas, East Mountains.
I think we forget about that.
People
even though
forget
they're
about it.
15 minutes away, east or west,
Yes.
they're still considered rural homes by the USDA.
Right.
And they qualify for almost farm program housing.
Yes,
right?
it's 100% financing. Actually, it's more than 100% financing. They'll finance your purchase price and your closing costs. It's actually the very best program out there, and you don't need to be a veteran, and there are no income requirements. It's a great loan program if you live outside the city.
That sounds awesome.
And your area qualifies. And there's maps. The Corps of Engineers has maps for us that we can tell you real quickly whether or not your house qualifies.
I love it. Well, we'll be back in a couple of seconds. We got Stacy Sacco here with his friend Holly Heisman from the UNM Anderson School of Management. They're going to be talking about the new Small Business Institute at UNM in a couple of seconds on the Morning Brew.